I'm here, Joe. Be patient. I'm getting ready. All right. So the numbers are out. Market don't like it. And we'll see how far it goes. I mean, everything seems to be setting up like a shock pattern here. Um, Interest rates popped up here a little bit, which that's what they're supposed to do on the news. Nothing of great significance, but getting so far above the high of that bar and still in a downtrend. We're still kind of waiting, and we got this Fed thing tomorrow. So, you know, we'll see how much the market corrects here today in anticipation of things being on the Fed doing something more than what they thought they would. Um, anyway, just looking at what they're doing right here, news come out and boom, lower it goes, stopping or stalling, let's just say, at this little congestion area right there. Is that something of significance? You wouldn't think so, but it came down kind of hard. It could bounce at the open. If you get some retest, it bounces back up. Anyway, it looks like it needs to come down here at this point or test the 50. It's kind of setting the stage for the day. Yesterday, buyers gave it a try a few times. They failed. We ended up with a day like it was, and it sold off at the end of the day when it couldn't rally. And so now there's follow through to it. So I was looking at the charts, this big wide range bar. We've covered this before, power bar, but the weakest link. And you can see as I move the cursor there, you can see right here, there's the wide range bar. And when they rally like that in such a fluid way, no sideways patterns, no pullbacks, nothing to trade against. And typically it goes down until it either creates support or it reaches a level where traders feel comfortable, to start to accumulate. And that just starts the bottoming process, which clearly there's none yet. Russell, closer to that destination. We talked yesterday about the possibility of this coming down to test those lows and then possibly getting a reversal. Anything like that, or, it's a bottoming tail bar, but coming down into this area, breaking the low would be a little bit of a bonus, as we call it, with a W pattern where it comes down and actually takes out the stops and then reverses back up again. So we'll see. Right now, wide bar down and just chopping back and forth as traders are. Is it going down further? Will it bounce? There's always going to be traders willing to trade the other side for a scalp. Nothing wrong with that. When it gets extended, grabbing a few, getting out of the way, and then it sets up the next sell setup. But it is down at that support level here. And we'll see. It should not. Ideally, it's not going to stop there. It just keeps going down, the day being the way it is starting out here. It comes down to that level where more buyers will feel more comfortable, more aggressive than a little short-term pattern such as this one. Doesn't always get all the way down to the low, doesn't always break the low. I've seen plenty where I was thinking, let it come all the way down here. And when it doesn't, it's kind of a little short-term sign. It's a little bit more bullish than maybe you thought. There was a lot of demand up above that level to hold it rather than going down through it. So going down through it, the idea is that it's taken out the stops. It's kind of a flush that helps remove the potential for supply. Those that are looking to accumulate, they sat through this and now they're pulling back saying whatever, stops down there and it takes it out. And, you get a little climactic flush as it goes through it. And Dow led the way down. It led the way up. Now, breakout failure. Spoke about this yesterday. This was supposed to go up and make new highs, and that's why it's a shock. What we call a shock bar, where it was I wouldn't call it a wide range bar, but it did expand a bit compared to the last two, not these, and now it's into the void. So this might have the greatest the potential to go down, whereas this had great potential to go up because it came down so hard. Well, it went up so far. This may have the greatest potential to go down. And we'll look at the cues, but I'm thinking that since they were the ones that were lagging, and certainly were yesterday, they may have the least potential to go down, but we'll see. But looking to the left here and seeing that there's nothing here, well, why shouldn't it keep going down there? Looking at those converging moving averages, you can see the line there. There's nothing to the left, but they'll probably come into play. So be aware of that. 35, 400, converging 20 and 50. Traders are looking at it. It may stall at that point. S&Ps, nothing to stop it. Nothing. So you got to watch out. When we say that there's nothing to stop it, right, the assumption is it's going down there, right? 46,000. The other, we have offsetting concepts that keep us in check from getting too attached to our opinions, and that is bar by bar analysis. So on the way down, for whatever reason, it could be a trader pivot line, it could be somebody using a fib line, it's who knows what, VWAPs to come into play, all of these type of esoteric, mystery tools that are out there. Anyway, it creates some kind of a pivot as buyers step up there on that. So what do? We see, okay, pivot forms here. How far does it rally? If it doesn't rally deeply, well, odds are it's going down through it. And then once a pivot forms, we know it's created a new reference point of support. But this is a thought process, what we call an MTS. The modules or chapters we refer to them as part of the thought process because each one builds on the other. So as we create, or as demand creates a pivot, and you can see there's nothing there. Well, now there is some reference point of support that traders will trade against. The trend is down. We assume it goes through it, does it? And it's just, a systematic step-by-step process. Thoughts on 45.25 holding up for tomorrow on SPX? I would say yes. Everybody can see this unfilled gap. So 4,600, right? The close is there. You've got your 50 MA. And honestly, McGraw, even if it doesn't hold, let's just say for whatever reason, institutions are just now really rattled, or the Fed comes out and says, you know what, we were wrong. We just totally missed it. Quarter point increase. Oh my God. And it just blasts down here to 4,500. It's going to pop right back up again. Just whole number moving too far, so it's like, I make the analogy as far as, I know you're talking to me about, I believe a credit spread. And, at times with these credit spreads and any trade in reality that goes against us, and we see things like this is moves too far, too fast. I see this market is near a whole number. I see these, huge open interest over here. I see that market is at support. And I'm like, you're looking at this thing and you're saying, you know what, I am just freaking screwed here. But you know what? I'm going to hold on because I think with all of those things going on here, there's going to be a better out. And with a credit spread, this could be, I'm preaching to the choir here, But this could be one of those situations where, you know, this thing's ready to take off, you know, an arm and half a leg, and the bounce comes, and 20 minutes later you're profitable. You know, whereas if you were to short this down here and it went down there, your chances of getting profitable are like, okay, lightning striking 6 times in a row on the same day. It ain't going to happen. But with a credit spread, you know, with a spread down here, you know, you're going to be like, you know, hiding under the bed. Somebody tell me if it's starting to bounce yet, and you get what I mean, right? And then it pops up and it does it fast, and holy shit, I'm profitable, right? So it can be a wild ride. So, you know, that's how I look at it. How do I come to that conclusion? Well, you know, down here is just so far to go, and you know, let's just see where we're at here, you know, from yesterday to go down there. Well, to come down to 4,500, it's about 5%. And that's kind of been the magic number, you know, down here from here was about, you know, 4.5%. And so we, you know, as chartists, we look at symmetry in things, and, you know, kind of the corrections that there's been, you know, in the past. And it's like, okay, if this thing can move from here to here that fast, and there's that support, and, you know, here's the 20 MA, you know, I'm looking for another line of defense. The 20 MA is the same as the 100 on the daily. And so that's, you know, here at 45.35, which gives you another little reference point there. The 100 MA, which institutions are going to be looking at as well, a simple one. So I think that would work. I think, you know, just based on all those things that I said. All right. We looked at the Dow, down 100 points here. Right on those converging MAs. It's got room to go down. There is, well, there's a little shelf a little further down there. All right, 35,300. Keep that in mind. Silver, yesterday I talked about the potential for the breakdown bar failure. Don't look like that's happening, you know, with this inflation. And you would think it would go up, but what do we do now? Well, it's down here at support. It could be one of those things. Maybe it's going to, this bar turns into a bottoming tail bar. I don't know. You know, it just came down vertically. So that news was perceived to be pretty darn bearish, and it's starting to stabilize here with a climactic buy on the 5-minute. Gold, you know, down as well. What didn't go down? You know, Bitcoin. Well, you see green. Is it meaningful? Well, this is down 70. I don't know why this doesn't know on the open here. This platform has never turned that red for some things. I don't know why. Anyway, it's just an inside day here. So I'd watch this where it closes today. So as the market experiences this selling, does this hold as an inside day? And then, of course, it's not a textbook breakdown bar failure, but we would watch to see if it took out today's high tomorrow. And we'll see if that happens. Oil is going down very slowly. So pretty much everything is going down. The euro looks like, well, not a big deal. Kind of a bear flag there. It's on some support here. You can see over there to the left. Here's Islamic dollar, UUP. UUP dollar has just been strong, but chopping sideways there. And always, you know, keep an eye on the VIX intraday to see which way it's trending. You know, it's an inverse pattern to the broader markets. So it came down hard, which, okay, the market was strong. This type of pattern typically doesn't rip right back up again. So it creates the thought, right? It could go back up. I have to apply bar by bar analysis, but it creates the thought that because this came down so hard, today being weak, you know, yeah, it could come back up and roll back over again and go sideways. You have these thoughts as to this is what this pattern has done in the past. It doesn't always mean it's what it's going to do today, but a pattern that moves this far typically doesn't go straight back up. Now, we have seen that in this market, this craziness where it's gone up and back down again. But as I apply that to SPX, and the opposite, the strength going all the way back up here, there is this, this gap fill area here in this 4,600, whereas, coming down here, it could be where things just shift back and forth. This crazy type of price action, what can I say? Does it keep you on your toes? Hell yeah. So you better know what you're doing or you're going to get your head taken off, and you better have the technology that, can put your stops in and click them off, because by the time you think about it, it could be an increased amount of pain. So we start the day with this move down, and it looks like it's going to continue to go down because there's voids below. And looking at these transports, I mean, if things get out of hand, measured move down, I don't know. I see what I see here. I see these different possibilities, but I don't come away from this with other than things are negative right at this moment. They have the potential to go lower, and that news tomorrow could make it a hell of a lot worse. Or if the market interprets it a certain way, we could see a turnaround day. And you know what? We've got all that open interest on Friday that could ping pong this market back and forth. So I'm going to be leaving for the rest of the week. You guys figure it out. Send me a text message, and I'm kidding, but it's that kind of situation where it's like there's all these variables that are happening, and it's like, yeah, we can trade this intraday, but where does my confidence level as far as things continuing to trend begin to change? And I don't know yet. So, this thing is unfolding, and we'll see what happens in the coming hours, and of course into tomorrow. All yours, Dan.
Good morning. Yeah, the old breakout failure yesterday, and that's I'm selling into the close. I was out the last few minutes and came back and like, wow, what happened? Usually they're little blasts off to the upside. I think people are nervous, obviously, ahead of the Fed. We talked about it yesterday, that we know what they're going to do, but the market's going to react, as always, 99% of the time, to what's priced in. Lost my pre-market here. All right, so let's see our opens. We did a put spread on Microsoft. I see that's down here, so that could be a problem. We have a few shorts on VIAC, CAR, NVIDIA, so those are all fine. So, anything going on, I've canceled many trades, and I sent an alert through Telegram this morning, canceling everything. This work day is the only one I said keep it active. I have an alarm set, and the likelihood of it triggering is very low, but keep an alarm there. Janet, the Sol that you mentioned yesterday, I have on a 5-minute chart here. It really needs to hold right here in terms of retracement, but we'll keep an eye on that still. Let's see. Khaled's asking this. Khaled's asking, a selling result of the Fed, inflation, and Omicron. The answer is, Khaled, all the above. The absolute best answer is all the above, because the market is constantly looking at everything, and then they discount what it's many market participants, and that's why technical analysis works. We sold off even more on the PPI this morning, And you know what? Even this is the first time I've heard Kramer. He usually just absolutely worships, you know, what I've heard in the last year, worships Powell. And today, you know, he's like, yeah, he's painting himself in a corner. Yeah. I told you yesterday, El Alarian was blasting Powell both yesterday and also over the weekend on one of the news channels. All right, let me look at some other gappers here or anything else you all have for me. We're also short LZ. Video. KMX I canceled. Juniper is on our long watch list. It's gapping down. It looks like people are just selling here. I also see another gapper here in Intuit we bought yesterday. That's not a good looking gap. QE Affinity. Well, I know. This is the gap disaster du jour, courtesy of being in a bio. Look at this thing. Up to 80 bucks. This morning, $10 and change. Can you pull up the spider chart? Someone's asking on YouTube. Can you pull up the spider chart? Yeah, I did, but you're not asking me a question. Greg reviewed the broader markets in detail. You know, yeah, upper right is 5-minute chart. Greg's circling there. But based on Friday's close, over Friday's high, we expected higher prices. So this is a shock. And now we're gapping down. 463 and change. That's a bearish gap. We had a bearish pre-market. So again, I don't know what your question is, but we look lower. This was a upside shakeout with a big price void and an unfilled gap. This tail is not real. I remember it did not do that. You can see over here. So look, we're now under the opening price of the bullish gap on December 7. So we have 1, 2, 3, 4, 5 days of bullish, bullish price action that we're now under with no support to the left. And look at yesterday, we had a big bullish gap, gave it up, pre-market started selling and then kept selling. So this is a bearish short-term top. But you need a setup to get on board right now because that's extended. Oh, we're actually in Valley. I see it's green. Yeah, that was a nice little bottoming pattern we got into. Bitcoin down a little bit here, but pretty much flat. Let me continue here. Pfizer, I guess, came out and gave some more results for their new miracle pill. 89% effective, you won't die. This is what we call a sloppy bull flag. If you measure from this gap breakout here, the flag pole, sloppy bull flag, gapping down though on the news. RL got a downgrade, 112 and change. There's no pattern. KMB, we mentioned yesterday, nice defensive wide range bar, igniting breakout. FE had a breakout yesterday. That looks great. This would be a beautiful 1, 2, 3 if we get an inside day. And this is also another good example of multiple time frames being in alignment. Daily, weekly, monthly look great. Full C, somebody mentioned as potential bottoming pattern. I said, yeah, potential. I like the bottoming tail. I like the engulfing bar. Kind of has an end of day, bullish trading range. So that's worth watching. Diego Fleur for a long. Very possible. That's a beautiful gapper. It's a beautiful gap. You know, a little downside shakeout, red bar ignored. I like it a lot. So let me put that in the bottom right here and see how it sets up on a 5-minute chart. But very possible. So, you know, Greg's gap course teaches a 7-step process. Just for time's sake, I summarize it into 2. I have a compelling gap that's not excessive with a price void. Check. Put it in a 5-minute window, see how it sets up. So we're into the prong number 2 right now. Our LZ low alarm. So yeah, this is the best gapper I've seen all morning. Let's keep an eye on it. And then maybe we do 5-minute high. Let me send it to our subscribers just to put them on the heads up. All right, LZ. LZ, we can, you know, we're just in trail mode. This has been a nice, beautiful setup. Oh, Rita, I don't know if Rita, you're here, but Rita and I found this scanning on Thursday or Wednesday. So we've been in this since Wednesday. 1582. Hey, Rita, but you remember you and I found this together scanning. It's been just very easy management, no whipsaws. All right, buyers stepping up here at 932. So for, you know, shorts, it just depends what time frame and if you want to tighten your stop on some things.